All right, here we are. So, welcome everyone to Smart Investing webinar with Zach Meir and Clem Chambers, who is going to join us very soon. So, Zach, you here? We have the market a bit fragile, the variant that is worrying everyone, even though is obviously is going to be less deadly than the Delta one. So I think there is a lot, happening in, in the market, but also in people's minds, saying with inflation, the Fed started to kind of stop using the word transition and transient and start to say, right, there might be, inflation maybe is going to be here to stay. Financial markets are a bit fragile, exactly, maybe that's the right word. And then there is the crypto space. And then also there is the recession that we are in, the economy that is in trouble, because I think that's an important element that we should consider. We are not in a strong financial position that we were before COVID. So things are different. Are you worried about the variant?
Do I look worried?
Yes, I think you do. You look somebody that is thinking, is trying to come up.
I was thinking about how many things that you said did I disagree with.
Okay,
I've never heard. I disagree with every single point that you said. The market's looking fragile. Well, not really. No, the FTSE's bounced 350 points from the low of the fake news of the
Okay.
So that's wrong. Number one. No more people are dying from Omicron, and I haven't heard any death from the Omicron variant.
That's true.
So that's good news as well.
This is what we said. That is
literally, you might as well it's just like now they call, when there's a storm, they now want to give storms names. It becomes, Alf and then Beta.
Or Zach Meir.
Yeah, exactly. Yeah, Storm Z. And so now they've got the same rubbish with these different flu viruses that we have. The whole thing is complete madness and mania. It's completely. There's nothing you said, and then obviously you said about inflation. Well, obviously, if you spend 13 years printing money like there's no tomorrow, there's eventually going to be a bit of inflation. But the fact that we've got, let's say, even if inflation is at 5%. When I was young and before you were born, we had inflation at 15 or 20%, and all that happened was that prices went up and wages went up to catch up with prices. Didn't do anybody any harm. House prices went up then as well. The only mistake they made in the old days is whenever there was inflation, they would raise interest rates, so that would make the property market weak. Hopefully they can't do that now, and they would destroy the economy. So they did that in the late 80s and early 90s. Raising interest rates to combat inflation is the most stupid idea there ever was. And the reason that we've had a better time in the last 20 years is because they stopped raising interest rates when there was inflation. And actually, after when they did that, there wasn't any inflation. So everything you said, I disagree with totally.
Well, I did said that the variant is not going to be so deadly like the previous one. So that I think you agree on that as well. For me, the market, the reason why I'm saying fragile is because, one day they are up, the other day they are down, and gold is not actually rising when it should be rising. People overreact to news, and that means that a market is fragile. Even if you then bounce back, but then you go down 10% the day after because something is happening, everybody panic. I mean, that doesn't seem.
But the Omicron news, which was I think the Friday before last, even on the day, I knew that it was fake news. It was basic. I'm not quite sure what the rationale was behind doing it. Maybe just to sort of keep all these COVID measures in place or whatever they're trying to do. But it was so obviously fake news that 3% fall in the stock market was complete rubbish. And in fact, it was a great buying opportunity. So that was great. it's probably the case that even in the crypto world, the 20% fall that we had in Bitcoin was another buying opportunity. The problem with the cryptos is that they're susceptible to falling to a sort of a one-day shock because it's not a properly regulated market. So you just have no bid. You know, there's a scare and there's just no bid at all. And that's the Binance and Coinbase, whoever they are, they just shut off the machine and nobody can get out. So you just have a gap down. But that's a problem with the mechanics of the crypto market. I don't think it was a real problem with crypto. I think crypto is very much here to stay. It's taking a lot of business away from the stock market, which is probably right, given that the stock market is over-regulated, crypto is under-regulated, and the reality is you need something probably in between the two. But I mean, the stock market and all the normal markets is totally over-regulated. And the reasons crypto is so successful is because it's not regulated in that idiotic way. There's no stamp duty when you buy Bitcoin, so that saves you 0.5% or whatever it is just before you start. So that's wonderful, and it's much easier to list a coin on in terms of the crypto markets than it is trying to list a company on the stock market. I spent what was it with Lyft? We started, I think, in May, and we only got the sign off in November. I'm not quite sure why it takes 5 months to do all that, and the cost with lawyers and accountants and all these things. I don't think that the cost of listing or producing Zach coin would take that long. Maybe
Zach coin would take it approximately about an hour.
Yes, exactly.
About a year ago, I actually, just to go through the process, I created the Clem token, and you can buy it on Uniswap, although I wouldn't advise you. Was
it a vanity project?
No, it's just the fact that you've got to do it to see how easy or difficult it is and go through all the connections and all the complexities that is. And it takes a couple of hours.
Yes, and then you've got, so it took 5 months to get Lyft Global Ventures onto Aquis, which is not, it's not exactly the NASDAQ either, if you see what I mean. So it's, it should be relatively straightforward. There was nothing unusual about the listing or the company, apart from obviously the personality of the CEO. And it's the contrast with that, and then the 1 hour for Clem coin, and then also if I want to talk to you about ADBFN or online blockchain, you can't say anything because you're so over-regulated. Your mouth is literally, your lips are sealed, aren't they, Clem? Exactly. So how is that a great, fantastic, capitalistic financial market? It's something that needs to, it literally is unbelievable.
Well, it's going to have to change, otherwise it will perish now.
Well, it is perishing. No, that's the thing. It is slowly perishing, and so the liquidity goes away, and then all sorts of things start going wrong, and they will start going wrong. So
right. It is funny because then we are seeing companies they actually want to get listed, like Coinbase, like Blockify, like company in the crypto space. They are searching for a listing, like CoinShare. So it is kind of like strange to see the great opportunity and the freedom that you have in the crypto space, and then some company they actually want to get regulated.
Well, no, but they want to get regulated because the stock market as an idea, as an exit for a successful business is a brilliant one, and obviously it can be a great entry for a company that's going to be successful. But the problem is, as with all government and sort of organized, the government, well, that's what Reagan said. If it moves, tax it. If it still moves, you have that kind of thing. Anything which is where there's activity, there's opportunity, the government goes in there and just taxes it to death, like the housing market, the stock market, all those things, and it's just disastrous. And that's what crypto is, basically an anti-admin block exercise as much as anything else. Just people can't stand the regulation, the cost, and you've just got all these other people who are obviously living off the efforts of entrepreneurs, which is, again, it's wrong. And part of the reason that if we are in a crisis with social care and other aspects like that, is because we're overtaxed, and people, when they do a lifetime's work, but they've got nothing left to show for it because they've been taxed to death all the way along.
Well, they're in the private sector, not in the public sector. The people who have worked in the public sector their whole life, has got at least a little bit to show. And if they're, you know, top of the police force, they've got multi-million pound pensions to, you know, soften the blow of old age.
No, you're right. I know, but I suppose with the BBC, if I was, you know, the diversity officer or something there, I'd be getting 100, 200K a year and a pension. So it would be, you're right, it would be fantastic. But I think maybe the BBC is the best example of the mixture of private and public, that you go and work there.
I haven't lived in your country for so long, I don't get a vote. So, you know, I voted with my feet in the 90s.
There's no point voting. There's only one party anyways. It doesn't really make a difference whether you vote or not, actually, I'm afraid to say, Claire.
You're becoming one of those libertarians.
No, I'm not. Libertarian is, for me, it's actually just another code word for being a sort of an alt-right type person, which I'm clearly not. But it is the case that there's only effectively one party in this country, and that's why Boris and others can behave as they do, because there's no opposition, there's nothing to stop them. And
we can't make it politics. We can't do politics.
No, we're not doing politics. We're discussing. But I think that the role of politics in the financial world is the most disastrous aspect of our age. That is true. You can't go.
That's ahead.
The Fed chairman, you know, with his pretending that he's going to do taper and all this sort of stuff, they can't do anything. They would go, everybody would go bust. They can't do anything on that front.
Right. Okay. So picking up on this, because I want to clarify three aspects: tapering, twisting, and tightening.
Yes, and that's the reason. The reason that we've had another COVID scare is because it gives the central banks an excuse not to taper, to tighten or transition or do whatever they were going to do with whatever they were supposed to be doing. So that's the perfect alibi. Well, they'll just keep on printing, which I think Clem would appreciate and agree with.
Well, I mean, I totally agree, but I don't think they need a scare. I think they're world-class, you know, liars. I mean, sorry, information providers. And, you know, they've got plenty of time to go, it's over there. It wasn't us. We didn't do it. It's them. It's not us. Really? Oh, yeah, I see what you mean. Oh, yeah, we're very worried about it. 2 months later, oh, we're really, really worried about it. Yeah, we're so worried about it. We're really doing, ooh. And then a year later, well, actually, it's quite good, isn't it? Don't you think it's quite good? Yes. No, you don't. Oh, we agree. Oh, well, we're nearly finished now. Just drag it out a bit more. Just drag it about a bit more. And now we're done. And bang. And then they tighten. Look, at the end of the day, there's two numbers, or only one number actually, and that is the ratio of GDP to national debt. Yeah, and according to the geniuses in the economics, geniuses, if you go over 80% of debt to GDP, depending on how you want to measure it, and that all these numbers are basically relatively massaged, but let's say that's absolutely right. When you go over 80%, you kill your growth, or you start to hurt the growth of your company. Well, governments want growth, and they want growth because they want to pay their own pensions, and they can't have growth slow down because that hurts their pension. So 80%, or let's call it 100% debt to GDP is where they've got to be. And now they're over that. And to pull that back, they can't say, oh, we're going to go into austerity. That's not going to work, is it? That's not politically possible. So what they're going to go into is inflation to get the nominal value of GDP up, the nominal value of taxation up, and the actual value of their past debt down. And then as they inflate, they will cross over with debt to GDP at some point, probably about 3 to 4 years away from now. And then they'll go, oh, you know, this inflation that we couldn't deal with, bang, and it will be gone. And everyone will go, ow, that hurts, and then we go back to normal. Inflation is, Milton Friedman said, inflation is always caused by more money printing than production. I put a little bit of a twist on that. Inflation is always caused by government. It's not caused by anybody else. It's always caused by government.
Yes, that's a very good point. The other point is that I really don't see. I like inflation. I think it's fantastic. It means that if I'm a worker, I can ask for more money from my employer, and if I'm an entrepreneur, I can mark up and profit, on goods and services. So it's fantastic. What's wrong with it?
Well, at a certain point, it undermines the stability of everybody's operation. And that is probably just over 10 or 11%. Yeah, but they're not going to be aiming for up there. I mean, they've got two choices. Do we have a big surge of inflation to get it all sorted quick and then blame it onto everybody else? Or do we drag it out and just kick the can? And I think they've just kicked the can for 3 to 4 years, and you'll see 7 to 8% of, or maybe 5% of top line inflation. The inflation, after they've massaged it all away.
Yeah, but isn't it better way, the best way of controlling inflation is actually tax, not interest rates?
Well, yeah, it didn't work in the 70s, did it? There was 98% tax in 1978, and it had been huge in tax all the way through the 70s. And there was huge inflation all the way through the 70s. I mean, you know,
because everybody, I suppose everybody left. I suppose all the people with money left. You know, Michael Caine left. I mean, that was the problem.
Yeah, but the rich people's tax is not where the tax comes from. It's poor people's tax. That's where the tax base is amongst the non-rich people.
So why did that was the thing, that the tax was only, income tax was brought in by people, somebody sort of suckered the normal people or ordinary people into saying that, if you know, everybody should pay tax, so the rich people pay tax. So that was,
that's something,
that was the reverse envy.
Great motivator, right? And politicians always aim at the base emotions, but ultimately governments tax as much as they can, not as much as they need, right? And that's just why governments and economies get into a pickle. Yeah, but this inflation, which I reckon will be in real terms 8 or 9% for 4 to 5 years, and will look like 5% in terms of the government figures, which already have heavily massaged. And then, you know, once those GDP to debt is rebalanced, then they'll stop printing, because it's not good news for pensioners, i.e. them, to actually have inflation eat away at their pension. So, you know, that's one of the reasons why inflation is a graft, and one of the reasons why governments go, oh, we've got deflation and we can't cure it, even though they've got it in Turkey and Zimbabwe and Afghanistan. They seem to be able to manage it. Yeah.
So inflation is a bit, it's like the sort of the financial equivalent of COVID, is it? But it's just it's a little bit of a myth, let's say.
No, inflation is very, very real.
But the damage, the actual, I mean, you know, let's say, for instance, COVID, there's a big, you know, kerfuffle about it at the moment. But the reality is that the death numbers are the same. I mean, we could do nothing about it, and the world wouldn't end. Same with inflation. We could do nothing about inflation, and the world wouldn't end either.
Inflation crushes the weak, and it crushes the people that are passive. Yeah, and that is most people. Most people are economically passive. All the young, all the, you know, pre-earners, and all the post-earners, all the sick, etc., 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 all the not supersonically bright. Yeah, so inflation is bad for society because it really hurts everybody but the, you know, highly active.
So why did the government spend? So why did governments spend 13 years pumping inflation into the economy?
Well, they pumped asset inflation into the economy because there was such a large hole. If they didn't paper over that dump in 2007, the whole system would have broken. And the only way to let it not break and absolutely melt down and leave everybody in ashes was to print money and prop up the superstructure of the whole of the global economy. And that's what they did. And that's why they've done it again. They're just papering over. At the end of every war, there's been, since the Roman Empire, before the Roman Empire fell, after disasters, you inflate the money, you debase your currency, and you renege through inflation on your debt. You can see that in ancient Greece, you see it in ancient Rome, you see that even in the Dark Ages, you can certainly see it in the Middle Ages, you can see it in the Renaissance period, you can see it after the American Civil War, you can see it after the British the World War I and World War II. It's the same old story. When you have a hole so deep, you can't trade out of it. You paper it over by debasement of currency and by inflation. And all you have to do is look up banknotes and the history of money, and you see it always follows the same old pattern. And here we are again. We've had a disaster. We had an economic effect that could not be traded out of, that had to be spent out of, had to be papered over. It hasn't had to be left by generating all this money that will ultimately, and in the medium and long term, create debasement and inflation. And here we are. It's the same old story since the beginning of time, since, you know, Croesus invented the electrum, and since, you know, Caligula cut down his silver coins a little bit, or, or the Romans ended up washing their copper in silver to say it's silver, and the 10,000 franc note in 1950, and the
Harold Wilson
silver
with the pound in his
in
pocket.
1918 going from 100% to 50%, then going from 50% to zero in 1947. It's the same old, same old.
Okay, so what about inflation impact looking at different countries? Because the US will have a certain level of inflation. The UK have a certain level of inflation. Italy have a certain level of inflation. My parents came to visit last week, and they basically were telling me in Italy, there is no inflation yet. So that was quite, okay, interesting. So how we are considering all these different inflation coming from different countries and how that impact the overall global economy. What's basically the result of this fragmentation of inflation, if there is any?
Well, I don't see that. I see significant inflation in the UK. I see it in Europe as I go around Europe, and it's certainly there in force in America. So, I mean, there are inflations do hit different levels of society in different ways. I mean, for example, back in the day, there was high inflation amongst the middle classes because, their education was going up, various things were going up that weren't affecting people whose whole budget was being spent on food, because food inflation was pretty low before COVID. And now we're getting food inflation, particularly in America, and I see it in Europe. So that actually hits straight into the working class and the non-wealthy, because their budgets are more significant in food and necessities. And same with energy. I mean, energy costs have spiraled, and that hits everybody and not just one member of part of society. Of course, the rich people, they go, oh, my bill for my mansion has gone from 5,000 to 10,000 for electricity this quarter. What a pity, and sign it off. So they don't really feel that just as much as the person who's living in a one-bedroom flat, who's now having to pay £400 a year rather than paying £300.
Yeah, but I mean,
that really hurts them.
Yeah, but these things surely these things are going to change. In a generation, you're going to have you'll have a state income. Everybody will get like a couple of grand a month or whatever it is. You could easily say that all the sort of utilities,
all with benefit, Zach.
I'm sorry.
Why not? Why not?
I'm going to take issue with that, because there's something, all this universal basic income stuff is nonsense. We already have that. It already exists. It's called the government spends way more money than the average family earns. The government will spend on that family about £6,000 more than that family earns before they pay tax, right? So that that income you're talking about is already there. The government already spends on an average family
That's what I'm saying,
more than that family earns.
So you might as well
they just don't get the cash.
Exactly. So you might as well just make it. Everybody gets a couple of grand a month. That includes electricity.
Won't give that power away. Why would they give that power away?
I would.
They can spend the money on what they want to spend it on, not what you want to spend it on. That's the whole thrust of government.
It would be much cheaper to do that, wouldn't it?
Oh, well, that makes sense then. Let's be efficient and cheap. That's what government thinks about all the time, not.
Yeah, exactly. Yes. No. I mean, I think I'm sure we are now within a decade of a crunch point in the way that we're governed, in the way that we are, the welfare state, all those things. Now, there's no way, 5 million people waiting on the NHS list and all that stuff, or 6 million. You can't keep going on like this. I mean, that's why you've got to have COVID scares every few months, because otherwise, the emperor's clothes will be revealed to be nothing. I mean, that's the thing. We're in that game now. We really are in that game now, aren't we?
As an acquaintance of mine who was unfortunate enough to be in Europe and a Jew during the Second World War said to me, he said, doesn't matter how bad it is, doesn't matter how bad it's going to get, doesn't matter how dark the clouds are, doesn't matter how cold the wind that blows goes, it can always get worse.
Yes. All right. Okay.
Well, okay. So the next pandemic will be even worse. Okay. 5 years. Gosh. Okay.
5 years of inflation. It's going to be 7 or 8%. And the question is it going to be sufficiently low not to wreck the stock market, but sufficiently high enough to actually benefit that? And I think it's going to be borderline, but I think they all know what they're doing. Central bankers, you love them or hate them, they do know what they're doing. And to paper over the COVID disaster, pandemic, they are going to have 7 or 8% inflation for the next 4 to 5 years. And if there's another breakout, and they have to carry on printing, then it'll go on for a lot longer and be a lot higher. But if you look at the American infrastructure bill, it was going to be 4 billion or whatever it was. It's going to be 3 billion. It's going to be 2 billion. It went down and down and down and down and down. And it went down and down and down because both sides realized, no, they cannot go on like they're going on without wrecking the whole place. And they wanted to not appear to be, you know, the people that were taking away the punch bowl, but in reality, they tried to limit that stimulus as much as possible. And you can feel that desire not to stimulate all over Europe and all over Britain and all over America, but they have to. And therefore, there's a tension there, and we'll see how that pans out. But watch the debt to GDP ratio, because that will tell you when the party's about to win.
I think there's going to be there's going to be the, as you said, the thing's going to be worse. Like the permanent COVID, that's going to be there for all of our lifetimes in one form or the other. And, you know, periodic lockdowns, this, that, you know, plan Bs, plan Z, whatever they're going to get up to. That's all going to be there. You'll have permanently crypto as the sort of outlaw, the outlaw store of value or not store of value. That's going to be there permanently. It'll never be brought into the fold. It won't be in and it won't be out. That's going to be sort of like, you know, in that sort of no man's land.
Well, until it's going to start to get regulated, Zach, because you know, until it's going to start to get regulated, I don't think all the crypto will be regulated, but something is going to start to get regulated. That's why they are talking at the U.S. Congress. I mean,
but the whole point of crypto is that it's not regulated. You don't want it to be regulated by these central bankers. So, you know, that's.
But there will be some level of regulation coming up in the next few years.
Then it won't be a crypto. Then it'll be fiat.
Now, I think what people miss here is that crypto, as we've seen it, particularly Bitcoin and Ethereum and some of those guys, it's like a gold mine, and people go to it with their pickaxes and they mine the gold. And if you look back at the gold rush in the 1840s, they were so aggressive at mining that gold that they completely ruined the Colorado River, because they would go up to the mountains with high pressure hoses driven by steam engines, chop down all the trees, and then hose the whole mountain into the river to get at the gold. Yeah. And that was totally unregulated. Well, the first environmental regulations came about because the miners wrecked the Colorado River, because it all silted up and all the stuff that's flushing down the Colorado from the hydraulic mining. And the government regulated gold mines and the way that they could behave. They couldn't do the hydraulic anymore the way they were doing it, et cetera, et cetera. And you'll see that with crypto, things like Bitcoin and Ethereum, blah, 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 blah. But the key thing about crypto is not crypto at all. It's blockchain. And blockchain, as you've seen, has made currency. It's made decentralized finance. It's now opened up metaverse. It's now opened up the art world through NFT, which is that's the key in a locks technology. And crypto plus blockchain will equal all sorts of disruptive technologies that will remove gatekeepers. And by the time they caught up with Bitcoin in the next few years, there'll be another 4 revolutionary technologies that will spring out of nowhere that will be turning the world upside down. So wonderful thing about politicians is that they take a decade to catch on to what's going on. And Bitcoin, crypto, blockchain moves way faster than that. So they will never be able to keep that horse in the door. The horse has bolted. Not only has the horse bolted, but some other animals bolting out of other doors right now. They don't even know. So, you know, it's unstoppable, because like all dinosaurs, the thought to get from their brain to their tail takes so long, they can only end up eventually going extinct.
Yeah.
That shut you all up, didn't it? Sorry about that.
Yeah, no, I mean,
that was fantastic. It's a jaw dropping.
it's just a question that, you know, that's for a way, it's kind of confusing, kind of scaring people. And then, you know, investors, they might say, all right, with everything happening, what should I do? I mean, I think this is kind of a question.
Study and play with it. Because you can play with it for $100. You can play all day long with crypto because the cost of trading is so low. And, you know, a lot of this stuff is free, and you can even get crypto free if you want to play with it, you know, from forces and stuff like that. But it's a skill game. And the game is not to follow something that's exploding last week, is to work out what's going to explode next week. And what is the next blockchain crypto thing that's going to turn upside down something else. And there, because if you can spot those tokens, and they're knocking about, and they've got a market cap of 12 million or something ridiculously low. And bang, 6 months later, it's got 300 million market cap. Yeah. You just made 50 times. And that's the story that repeats over and over again, over and over again, over and over again.
So it's just like penny stock. It's like penny stocks, except with cryptos.
You could look at it like that, but it's not totally polluted by people trying to con investors, unlike penny stocks in, say, North America.
It's actually a genuine project.
It is a skill game. It is definitely a skill game, and penny stocks is very much a skill game, and people like to play it. It's fun and they enjoy it. Yeah. And crypto is that game on steroids. But it is a skill game. You have to see what is coming next, not what just happened. And that is the name of the game. And when we started chatting about this, metaverse hadn't raised its beautiful head yet, and here it is. It's a $1 billion industry out now, and game companies like Ubisoft are putting NFTs in their game. Bang, 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 bang. That is where people should be investing in crypto, in what is coming next, and they have to work that out. And that is skill, and that's hard work, and that is where the big money is to be made.
Yeah, well, everybody is started to talk about DAO. So I think I'm going to be repeating myself here, but I think the DAO will be an area of crypto that is going to get more attention, and perhaps maybe privacy coin as well.
Well, a DAO, the thing is, all these things have to get their hooks into the real world. And it's no good having a DAO that has no hooks to the real world. Everyone can go together and agree that world peace is a great idea on the basis of one token, one vote. But unless you've got a big army rolling around the world, it don't make no difference. Yeah. So a DAO, whether it's for a company or whether it's for a charity or whether it's for whatever it is, has to have its hooks into the real world. And the only thing I see about that at the moment is there doesn't seem to be much of a linkage into the real world, but that will come because it's a perfect mechanism for politics.
Yeah.
However, the current way that it works is one token, one vote, and that is oligarchy, and that is the old history of governance, which is pretty toxic. Yeah. Okay. And the what is the best form of democracy, or best form of representative government, or best form of government? And you can encode that in the DAO, but nobody's got a model for that, because there's lots of methods of government which have been fought over for hundreds of years. Anarchy, monarchy, communism, etc., etc., etc. These are all methods of government, and you could Wikipedia yourself to death on that. And no one's found an interesting one that seems to work apart from representative democracy. So, a DAO for democracy, that's going to be many, many years for anything. You won't see anything like that. For corporate governance, that's interesting. That could really, really shake things up, because if companies were run by a new kind of joint stock company structure, that could be revolutionary. But I don't see anybody yet with those sort of hooks into the real world. There's no fear off-ramp, so to speak, of that, but it will come. So I think DAOs is not the next big thing. It might be the next big thing in 5 years.
Yeah, gotcha. There are not real use cases as yet. And
there's lots of real use cases, but you've got to get the hook.
The hook in the real world.
It's no good voting on something.
So Clem, what about metaverses? What is the hook in the real world? Because we talk about Decentraland, we talk about Sandbox.
Look, I'm already in a metaverse right now. Yeah. This is a metaverse. Yeah, but it's just not monetized by a blockchain.
Okay, well, let's not give Zoom too many ideas, right? Otherwise,
I don't think they probably need any ideas. Ideas are cheap, application a lot more difficult. People are already living in the metaverse. They don't have their mobile phones strapped to their faces. They have them like that, and they walk down the street and into lampposts. Because that is their metaverse interface, and it's not a very good one. And then when you get a big curvy screen like I don't have quite yet, or you put your two monitors strapped into your head, which is cumbersome and not very good, it's just on the edge of making the metaverse more absorbent, more stronger in terms of absorbing your attention. But anything, when you're on a computer with more than one person, which might include Pong in 1974, is one kind of metaverse or other. It's the ability to have value capture in the metaverse that unlocks all this. So I can go to you in the game, and you can give me the sort of extreme pain to slay the dragon, and I can take that out and sell it to somebody, and they can give me real money for it, or Ethereum, and they can come into the game and slay the dragon. It's the monetization of in-game objects or in-environment objects that opens up a whole new economy.
So basically, avatars could become quite popular now. I mean,
well, they are already incredibly popular.
They are already, but
millions of people play their avatar every night.
Yeah,
it's just they can't monetize it.
Yeah, exactly. But it's not like booming NFTs. Everybody's talking about NFTs, but the way of monetizing avatar, maybe not everybody's talking about that.
Well, CryptoPunks, right? That's a billion or two, isn't it? And ape, Bored Apes and all that. And I'm sure that in due course I'll come out with a few of them myself. And it's all happening there, because up to now I go play World of Warcraft, and I've got gold coming out my ears, and we've been playing it for years, and I've got whatever castles or whatever it is in that game. I've never played it myself, but I know that I could go on that game and have a chat with a player who's actually a Chinese gold farmer who works in an office in China, who goes around and collects gold tokens, and I can pay him in real money, and they come into the game and give me a bag of gold, which I bought. Now, I could get thrown off the game for that, because the World of Warcraft people didn't used to like that. But now someone could create a game where I could go into the game, buy gold with Ethereum, take it out of the game, take it to another game, or spend it, buy a sword, and kill a dragon and get a really great object, take it out of the game and sell it, because it's extremely impenetrable armor to fight orcs with, or whatever that is. So now all my effort becomes potentially a $10 an hour minimum wage job, because I can sell those other items to people who don't want to do an hour to get a sword of extreme pay, or 10 hours or 100 hours. They just want to pay 100 hours worth of $10 an hour to get it. So they're paying me $1,000 for my 100 hours to get the blooming thing, and off they go slaying orcs with it, and they're happy. So all of a sudden you go from a totalitarian communist environment where nothing you have you own and you'll be happy, to a place which is now a environment, an economic environment, where your work is rewarded by objects which you can then sell for money. So you explode all that leisure time into now an economy, a gig economy. Now, a lot of people will be upset about that, because damn, money's back again. Money's evil. Don't stop it with the money. But it actually takes that moneyless totalitarian communist environment that all games are, and turns them into a capitalist totalitarian state. Such an improvement.
So on that, and just maybe to close up, let's talk a bit about DeFi, because I think more and more people are really getting to understand they can actually make passive income, which is much better than what the traditional financial market are offering. And perhaps maybe Zach has also been looking at DeFi. There are so many platforms that now are coming up with new APY, new assets. So Clem, first, Zach, are you doing some DeFi? Have you got on Umbria yet?
Yeah, well, not quite. I'm looking into it. That's all I can say at this stage. I wouldn't want to give any.
But you are missing like 30% APY on assets.
Too busy involved in the listing my company and that process.
Maybe you should do a token.
Yeah, I think, well, no, maybe the company can do a token once it actually hits the ground. But
I should do a token, not tell anybody it's me, and then sell it. Off the basis
but if you didn't,
Squid Game.
Yeah, but the whole excitement would be that it was you.
Well, I mean, yes.
Yeah. So what's happened, Clem, to the future of DeFi? What's changing?
Well,
anything is changing.
I think that it's interesting to watch what goes on there, because it's very lucrative if you've got if you don't get onto a site where you get hacked, which is the major risk in my book. You want to be somewhere where you think that you're safe. There are, and that's quite difficult. And I mean, I spend most of my time in DeFi worrying about who's safe and who isn't safe, who might go bust, who might get hacked, etc. So that's probably why the yields are so high. But there is a lot of opportunity there, and there's a lot going on there. And getting 8 or 9% on your dollars. I think it's a big deal, and everybody knows it's a big deal. That's why Congress wants to speak to these people, is because they're going, well, how are you doing that? So, well, we don't suffer from financial repression either.
That comes back to my regulation argument, doesn't it? I mean, that's the thing, that why all these things which have popped up are the result of over-regulation. And
well, sure. I mean, I personally believe that Bitcoin got its head start because there was a shortage of cash. And, you know, it's obviously a shortage of cash was what generated its very early days, because that's exactly what people who want to be buying illicit materials over the internet need, a cash to being able to do that. But in addition to that, I just think there's been a shortage up until COVID came along. There's been a shortage of cash to keep the wheels of industry rolling. So as soon as somebody invented a system that worked as a method of cash, it was adopted. It generated, it came into a market that wanted to have it. And it's the same with DeFi. DeFi does a way better job than traditional companies. There's a company called Zopa that I joined many years ago that was saying, oh, well, you can lend money to people and we take care of all the risk dynamics of it and, blah, 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 blah. And I went in there, it was such a terrible site. And it was done in such a way that you couldn't really get your money out. And I won't go into it. But anyway, they shut down this week. After all these years of doing it badly, they shut down. And who knows how much money they lost. And, it's just done so much better in DeFi. You can lend your money, you can borrow, and you can lend, and you can do it like that. I could borrow 100 grand in the next 30 seconds, well, maybe the next however minutes Ethereum took to process it. Like that, I wouldn't have to speak to anybody. I wouldn't have to do anything. Go click. And then I could send it to one of my off ramps and bang, it'd be my bank account. Now, you cannot do that. Try opening a bank account. It takes you 6 months to open a bank account. I mean,
that was awful.
Bang.
A company trying to open a bank account. It was unbelievable. It took nearly 2 months.
Yeah, it's amazing.
What is that? I mean, literally, what was that? It's with all the technology and everything else. It's unbelievable.
Well, I've got two theories for you. One is they're trying to make it so difficult to open one that everyone's going to be scared to close the one that they've got. Right? Because if you think, if you try to open one and it's so difficult, you go, oh my God, I don't want to close one down, do I? And then, I'm going to fall out with my bank and say, you're a bunch of rapacious swines. I'm going to close my account and not have an account for 6 months. Yeah. So I think there's a little bit of that going on. And on top of that, corporations hate two things. They hate work and they hate risk. And you open a bank account, it's both. So funny enough, they drag their legs.
There's no credibility for this country as a proper first tier business, venue, if it's almost impossible to open up a corporate bank account. I mean, that's just a joke. I mean,
you tried doing it if you're in the crypto business.
Was that easy? Or?
First point: are you in crypto? Tick. Application.
I mean, it really is, Soviet and Chinese and German Democratic Republic all rolled into one. I mean, it's unbelievable. And that's why the crypto world is just going to get.
The beer is warm. The beer is warm, isn't it lovely?
Yeah, I suppose it is actually. Well, not today, but yeah, I know what you're saying.
If you can go transnational, you're still able to do so. Yeah, and that's what the real hot atoms do. They go transnational all around the world.
Is it easier to open up an account in the Cayman Islands than it is?
No,
here?
I mean, as a person, if you look at countries that are up the creek without the paddle, people move, people leave. There's more blooming Ukrainians in Italy than are in Kiev.
Yeah, or you move to Guernsey, Isle of Man, or Monaco, or
well, that's upmarket. But I mean, there's all these different countries that all have different problems. But human mobility is one solution to that. If you tie yourself to the tree, you got a problem.
Yeah.
Always, anywhere, everywhere.
Okay. Well, I think
we've had our rant for the week. That was pretty good.
Yeah.
You have. Now let's talk about the market. What's going to happen to the market? I think that's very interesting because we've had this blip with Omicron. And, it was obvious to the likes of me and Zach that, they were saying, well, it's not as hard. It's not as wicked. And you know, that made a little bit of a lump. But if you look at the S&P, which is really the mother of all markets, it's got the trend, you know, of a lifetime. It's a straight line for years and years and years. And while the market stays within bounds of that, it's just going to keep grinding up.
Yeah.
And that's what I think is the master plan, to paper over the pandemic outcome. They have to keep pumping money in and keep inflation going, but not run away, but high inflation, not runaway inflation. And that will feed into equities. So it will grind up and up and up. So the only thing you have to look out for is that debt to GDP number. And you have to look for the market going out of bounds from that incredibly obvious trend that it's on.
Yeah.
And if it goes out of bounds, you need to be very worried. If it stays in bounds, or it goes, you know, goes nearly out of bounds because something bad happens, that's fine. But the moment it goes out of bounds and there's nothing going on, no one's saying anything, then you need to be very, very worried. Apart from that, it's grim determination. And if you're into it, buying the dip.
Okay, fine. Okay, so yeah, just stick with the stock market and just watch out if anything breaks.
Play the stock market.
Yeah.
Fear is real. Fear is lovely. I love fear. I love buying things.
Yeah, exactly.
And I like crypto. I like crypto too. So you need to be investing in good stocks.
Yeah,
or doing your equity thing, but you need to be watching the crypto and finding out what's going to happen next.
Yeah.
So you say DAO, and you could be right, because it's all about what other people think, not what I think. But I think there'll be also, in addition to that, at least one, probably two new things that will blow up in 2022 that'll come out of nowhere, out of planet Zod. And then,
but Clem, you are going to tell us, so.
Well, not until I've loaded my boots up. No, right now I don't know, but that's what I'm looking for.
Yeah, I think it's a very good point. There's always a new technology to get on the back of, and that's the wonder. That's the wonder of all of this.
And then we will know that obviously Clem probably made the 20% more than us, because we
when he doesn't come on, when he doesn't come on the show, you'll know that he's made enough money because he can't be bothered anymore. You know.
No, I'm the other way around. I want to come on the show and show off.
Okay. Well, that's what I've been doing all along. I've been doing that for years.
I've got a tip for all you guys in crypto, okay? And I haven't got any huge positions in non-stable coins, okay? Because, you know, Bitcoin could be 30,000 tomorrow, and or higher. So I'm playing things that I believe are going to go 100%, and I'm keeping it. I'm making my sizes reasonable. So if I'm wrong and the whole thing collapses, I can wear that token for 2 or 3 years and don't care. So the one that I'm keen on, really, really keen on right now, is Matic, because Matic is a level 2.
I've seen that. Great chart.
Well, you know, it's ripping it up, and even though it's all over the place because of all the Omicron things that we've had in the Bitcoin and doing its wobble, and it's very, very, very strong. And underneath the hood, it's the cheapest level 2 solution, layer 2 solution to Ethereum. And it's probably the strongest one. It's the one that I see in my book is getting the most uptake. And, you know, Steffi, you're seeing it with what's going on in NFTs and all that stuff. Yeah. There's a lot of people gone over to Polygon, which is the Matic token, is their token. So they are getting uptake, seriously sharp, very, very great technology. And the cheapest of the group, you know, Avalanche and Luna and all that lot, Cardano, they are the pretty little son of that family, and that's where my money is.
And I think to really just make a point about Matic is the fact that the team is a bunch of people from India, but they are all great. They all know everything about the project, and they're all very skilled, and that's quite unique about a project.
They've got a very good investor base. If you look at someone like Crunchbase, you'll see that they've got people like Coinbase Ventures behind. So they've got good investors behind them. Their technology is great. You know, it's getting a lot of uptake. I mean, serious quantities of uptake from the Ethereum community who are putting their stuff over to Matic so that it's affordable to transact.
Yeah.
So it's got that uptake. It works. It lives. It's got lots of people using it. It's got a very smart team. It's got good investors. It's got, according to Zach and I agree, a chart to die for. So that's where I've got, you know, a Porsche lined up, in play, So you know, it's a kind of nice little side bet.
Thank you, Clem. I'm off to. That's made my
buy the
day.
Deep and buy Matic then.
Yeah,
okay.
yeah,
Thank you, everyone. Thank you, Clem. Thank you, Zach, and thank you, everybody, for watching.